We are in unprecedented times right now. We are seeing the stock market, the real estate market, the crypto markets, all at all-time highs. There is so much abundance right now. If you're an investor, if you've owned your home, then you are sitting real pretty right now. You are enjoying a lot of government spending. We have seen so much government spending as the Federal Reserve buys up treasury bonds and is propping us up quite a bit. They are spending about $120 billion a month on treasury bonds. Well, what does that all mean? We are seeing inflation rising. It was almost 7% in November. We are seeing that now. Jerome Powell just last week said that they're going to be tapering off the spending and not buying as much anymore. Well, that could mean that we're going to get higher mortgage rates. I mean, we're at 2.5% right now. I have buyers who were able to get crazy mortgages this year, and it's been incredible if you've been able to get into the market. And yet we are going to see higher rates if this tapering is at a higher level, right? So we're rapidly increasing our inflation. So that means that Jerome Powell is saying that we're going to be rapidly tapering our purchasing of these treasury bonds. And if that's the case, then, well, what does that mean when real estate activity is already lower year over year and month over month across the country and in Santa Barbara? That is what we're going to talk about today. And my name is Alex Stoeber. Thank you so much for watching this. If you like this content, please give it a like, hit subscribe, and hit the bell for notifications for future content. So let's get into it. Let's talk a little bit more about what's going on and give you all the up-to-date information on the market, especially real estate market, and what could be happening as we go into 2022. So first, what you should know is that inflation at 6.8% in November was not expected. We were expecting, 4%, maybe 3%, and we saw 6.8%. That is really interesting. I mean, it's possible that we're no longer seeing transitory inflation, and this is signaling exactly that. The Federal Reserve has said that inflation is transitory. It's part of the economy. It's part of a natural process of global growth. And what it's signaling now, as the Fed made its announcement about tapering off its spending on treasury bonds, is that perhaps it's not as transitory as we thought before. So currently the Fed is buying $120 billion per month in bonds, and that results in a $4.7 trillion swell in its balance sheet since January of 2020. So last week, as I said, they said they were going to taper off their buying. And what this means is we could see higher mortgage rates next year, decreasing the buying power of those in the market. And with it, viable buyers for sellers in this market or in the future market could be going down. So current prices right now, the rates are so low that many more buyers can buy in this market, in this environment, and have confidence that they are going to be able to pay in the future, regardless of what happens. People aren't sure. Like I said, it's unprecedented. There is some uncertainty here. So whenever you're making an investment, you always have to look at the uncertainty when you're putting your money in anywhere. So essentially what we're looking at is that when the yields are low on the 10-year treasury note, their demand goes up. And that means that when the yields are high, their demand goes down. If the demand is low, the government looks to incentivize the market with higher interest rates, thus driving up the mortgage rates as well. If the government decides to raise the rates of the treasury bonds, then mortgage-backed securities become less exciting because the treasury bonds are risk-free, while the mortgage-backed securities have risk in them. For example, if you can get a 3% return from a treasury bond that has no risk because it's insured by the government, why would you invest in mortgages that return 3.125%, right? Why would you invest at 3.5%? There is a minimal amount of gain there for more risk. We've seen people default on mortgages in the past. That could certainly happen in the future. And at that point, the housing market would need to pay significantly higher interest to the investor. So buyers need to pay significantly higher interest to the investor in order to secure a fixed mortgage rather than that investor putting their money in treasuries instead. So what that means is we are already seeing that our market has had quite a drop in mortgage applications in the past. And, our peak here was in January of 2021. That's when we had the most mortgage applications in the United States. And, we had a low at August of 2021. And then we had, this little peak here in December of this month. So people are definitely applying more for mortgages. November was huge, and people are saying now, hey, if I don't get my mortgage now, and the Federal Reserve is tapering off its spending for next year, then we need to get our mortgage application and we need to get into the market. I definitely agree with that sentiment. If you want to get a home and you're not sure if you're going to be able to get these kind of rates in the future, then why would you wait in order to get worse buying power? You think the market's going to go down, the real estate market's going to go down, then that is one thing. But if you think the market is going to stay the same or if it's going to go up, then now is the time to buy a home at these rates. So what we've also seen is that the housing starts have started to come back up. I mean, they're pushing all-time highs again, right? So housing starts per month, there were 1,725 homes started in March of 2021. And now in November of 2021, we're seeing 1,679 starts. So that means that people have confidence that creating a new home or building a new home is going to be a more viable option than finding a home with the inventory at the all-time lows that we're seeing right now. Lumber prices also, right? So our peak right here was in May of 2021. That's when lumber was the most expensive, and it was at $1,670 per 1,000 board feet. And then now, like in December, we're at $1,119 dollars per 1,000 board feet. So that means like we're also seeing that the demand for housing starts is increasing while our supply chains have been just decimated. We are at crazy levels of issues with our supply lines and just our barges, our vetting of our trains, everything is slowing down because we need to make sure that all the people that are coming in and out are vaccinated and are treated and are made sure that they are healthy, right? So that's slowing things down quite a bit. And what I can also say is that our new listings, each year our new listings will go down, right? So this is talking about our inventory in the nation, in the US. So each year we see that new listings goes down seasonally in winter. And it is no different this year, but it's even less than last year when we were doing price discovery, and the housing market was definitely at a crazy time when we weren't sure how much real estate was worth. And then now, in 2019, we had less new listings coming on the market as we were going into a time of great uncertainty. And this year, we are seeing new listings go down as well. What is interesting about this is that our pending sales are actually going down, pretty much in line across the nation in the last 4 weeks with the last 2 years. And we are starting to kind of intersect with last year's inventory levels. So our homes sold is lower than last year. So year over year, you're seeing that less homes are being purchased, and that obviously has something to do with less homes being available as well, right? And our mortgage applications have kind of been all over the place this year. We're seeing new listing median prices way up. I mean, we're seeing a 12% increase in median list price year over year. And we're also seeing that the median sale price is much higher, 13% year over year across the country. That's all of the United States. Last year we were at $316,000 per year. The year before that was 276%, or $276,000. Sorry, I can't talk today. So what we saw was a 14% increase and then another 13% increase because our supply has been going down steadily, and we're just trying to get people home. So now that people are trying to build more homes, and the government is giving programs in order to help people build more homes. Yeah, homes are actually taking a lot longer to sell now. Right now we're seeing that the median days on market is they're not taking long to sell. They're taking even less time to sell now. The median days to close across the country are actually decreasing rapidly. People are just snapping these listings up, and our price drops here are actually decreasing across the country. So last year they decreased really rapidly. They were pretty high in the beginning of the year, here. And now this year we're seeing price drops decrease as well. So that means that people are getting their prices across the country. Our age of inventory is on the rise, but that's pretty much with what happens every year. Our average sale to list ratio was really high before. It was at about 102% across the country, and now it's at about 100%. So sellers are getting the price that they want right now in December. And what you should also know is that in our area of Santa Barbara, what I'm seeing is our month over month trends are showing that our average monthly median and average and median sales prices have been coming down a little bit. I mean, in median, it's pretty much stabilizing going into November. So November was a little bit lower than in October, so it went down by about $25,000. That's pretty stable in a market where the average home is $2.9 million. It went down $25,000. I mean, from October of this year, it's at 3.1 million, and it went down to 2.9 million. That could just mean that more high-priced homes sold in October, and that's why it came down. And we're seeing that month over month, our new listings are definitely down compared to 2020 of last year. So in November of last year, we were at 225 new listings coming on the market, and then we were at 151 this year. So way less inventory coming on the market. Going in line from here, we went from 225 to 160 last year in inventory, and now we could be seeing us going from 199 to 151 to even less. We had a big drop from November to December, and we're likely going to see the same thing. I've been checking the MLS every day, and it's pretty much the same story there. So what you should also know is, there you go, our closed inventory from last year was at 256 to 161. So that's a massive drop in sales activity there, in homes purchased. Yes, new listings was way down, and yet it looks like, the buyer activity was down as well. Our month-over-month price change. So last year in November, we were at 71 price changes, which just means that they didn't get their price. The sellers didn't get the price and had to go down in price. And then we went to 39 this year in price changes, but that also shows an increase from October to this year. And we've been pretty low all of this year. I mean, there was just so much price discovery last year in this market. So months pended. So homes pended was 149 this year in November, and last year we were at 225. That is also showing that less homes are going under contract. Could be up to inventory, could be buyer demand. Back on markets shows more buyer remorse. So there was 19 homes that went back on the market in October of this year, and 30 went back on the market this year. Last year was 43. So month over month, we are up, and year over year, we are down in homes back on market. But that is quite a steep trend. So we want to watch this as we're moving forward in this market. Also, coming soon, listings have been on an incline. People are just trying to get these homes on the market as fast as possible, get them in front of other people as quickly as they can in order to ensure that they get as many buyers to the table as possible. And that is the trick right now. We want people to get to the table, get as many buyers that they can at the table, and get as many offers as they can in order to get the highest price. Because frankly, a lot of agents and sellers do not know what their home is worth, and that is why it is so important for you to stay on top of the market trends and know what is going on in our area, in our market, and across the country, so that you can make the best decision for you and your loved ones as possible. Thank you so much for watching this. Hopefully this was helpful as we're talking about what's going on in the housing market and across the country in our economy. Like I said, the median sales price is still 14% higher on average across the nation than in 2020. And we're also seeing that pending sales is 5% higher and new listings is 7% lower than last year. That is essentially just saying like we have way lower inventory and sellers are in a good spot right now. It is still my opinion that the best time for you to have sold your home, if you were thinking about it, was 6 months ago. And yet I would love to talk to you more about what is going on in our market and how you can make the best decision possible. Thank you so much for watching. Please, once again, like, subscribe, and hit the bell for notifications, and I will see you on the next one.